Welcome, multifamily investors. It's Halloween and it is creepy. Appropriately, it's foggy, and there's a reason to be scared because we are in East Tacoma, and this is a group of fourplexes. Come take a look, and I'll explain. This owner bought this in February of this year for $757, and he's already over it. He got these ones out. He put some money into it, fixed it up. And I think he just wants to get out and move on. It's been challenging. I can understand why. Some of these neighborhoods can be more challenging than others, lower income, people that know how to kind of milk our system a bit. You have a nice private deck out here, the storage, kitchen's, move-in ready for the most part. You have a bath, 2 bedrooms, 1 bath in there. You can take a look in there. And it has newer windows, or no cabinet or no closet doors, wall heat units, baseboards, pretty straightforward. I would pass. This is not the best neighborhood to invest in personally, and I don't like that you're surrounded by other owners that may not take care of their properties or manage their tenants. So you could fix this thing up, have the best tenants, the best property, but you're still going to be dealing with 3 others that probably don't care as much as you. So there you have it. I will run numbers just so you see though what it'd be, but I don't see getting $80,000 more in 8 months of ownership, even though you put in some new flooring and fixed up the kitchen. So there you have it.
All right, welcome back. This is the analysis of the fourplex we toured this morning, and just wanted to show you. I do stand corrected. It's not in an HOA. It is in a development, though, that these are all identical fourplexes in a same little cul-de-sac driveway. But again, I'm really not a fan of that kind of setup unless you own all the fourplexes, because you don't want to put all this time and effort and money into making this a fantastic building unless you intend to try and acquire the others down the road, because you don't want to be the best one on the block and have all these other rundown properties or problematic tenants with broken down cars or leaving mattresses in the parking lot and abandoned chairs and things like that. It's just looked very junky. And this is East Tacoma. It's not, I would say, one of the most ideal neighborhoods of Tacoma. Now, Tacoma has some great areas like in North Tacoma, right? Ruston, North Slope. You get over there by University Place and Fircrest. There are sections that are good, and there's up and coming areas like Hilltop in the central area, but for the most part, this is probably one of my least favorite sections of Tacoma that I would consider investing in. So anyway, you saw the tour. Here's the numbers. By the way, this buyer bought this property for call it $750 in February of this year. So 8 months ago, paid $750. Now wants another, $85,000 to $90,000 for this, just because they got rid of some problematic tenants and fixed up a unit. I don't see that much improved value there in 8 months, and prices definitely have not gone up in 8 months. But let's just run it as a non-owner occupied investor. There's a vacant unit, so if you wanted to house hack this property, you could with VA or FHA. But 25% down, you're looking at a couple of $100,000. The rents, I didn't fill all this stuff for the units, but it's basically currently $1,410, $1,495, $1,495, and then the projected vacant rent is $1,600. And I think that's probably reasonable. The average for a 2-bed in that area of Tacoma is probably closer to $1,800. But because of that particular location, condition of the building, surroundings, I think we should be conservative in our estimates in the pro forma of the market rent. But I'm also going to account here that I think you should be recapturing some water, sewer, garbage expenses always as much as possible. Bill that back to the tenants. It's called RUBS, Ratio Utility Billings. And at $1,600, you figure the tenants would probably have to pay another $75 to $100 a month. So that would actually put them at close to $1,675 or $1,700. And then you could cash flow positive with this thing. Most likely, this is self-managed, by the way. If you ran it self-managed, this current owner has a management company in place. So you'd have to factor in, 6, 7, 8% for that. But if you self-manage, you got these up to pro forma. I mean, even day one, you could probably break even, this is an unbelievable rare instance where 25% down will get you. Well, that's why it's priced that way. That's the price for a fourplex in that area. Nicer fourplexes in Tacoma are probably going to be closer to $1 million. But they won't pencil. It'll be tougher to pencil. And this one's showing, an opportunity, but I can't, in good conscience, I recommend this to my clients. I wouldn't want to own this property, and if I wouldn't want to own it, I don't think most of my clients would want to own it. It's a good opportunity for the right investor, a seasoned investor, maybe has another building in this area. Like I said, that's the kind of opportunity and investor that it should be paired with. But overall, these are the fourplexes like built in the 80s, 2 beds, 1 bath, side by side. Everything's mirrored here. You got laundry in the middle. Not a lot going on to maintain. So anyway, in good size, 775 square feet. So there you have it. It wouldn't be negative cash flow, at least not from day one. So there is some upside here, and I think that if you were looking to spend though $200-some thousand on a deal, invest $200,000 in a deal, that I think we could probably do better. You wouldn't probably see the immediate cash flow like you would over here on this property, but I think longer term it's better to invest in a better property with lower returns initially. You'll get there. But anyway, hope that's helpful. I like to just do that so you can see what the numbers look like on a property that we tour. Thanks for watching.